India, China, they're very domestically focused, actually. Total exports relative to GDP is less than 5%, right? Not to say that the export is not important, but the domestic side of the economy is very, very big. I think most likely in the next 6 to 12 months, I'm not expecting India to do a lot better than China. I expect both markets to do well.
Die Geldmeisterin. Der Finanzpodcast mit Julia Kistner.
So I say welcome on my podcast show Geldmeisterin, Bruno Varnier, founder of Gemway Assets. Would you just introduce yourself a little bit and especially your investment strategy, why you focus Asia and emerging markets?
So my name is Bruno Varnier. I'm the founder of a company called Gemway Assets. Founded it in 2012 when I started to manage a global emerging market fund called Gem Equity. And from that day onwards, we've been doing solely that, investing and focusing only on emerging market equity and bonds, with a couple of funds. First, a global emerging market fund. Second, an Asia-Japan fund, specifically China fund. And fourth, more recently, a global emerging market bond fund. My background, I've been always doing this, emerging markets. I used to work a long time ago in Asia, spent 7 years in Asia in the 90s. I came back in 95 in France, and I've been doing emerging market equity ever since.
Okay, so this is the reason why you didn't talk too much about the situation of the tariffs and the US, even though this influences also the emerging markets in Asia.
The global events, whether they're mainly in the US or in Europe, have a very big importance for emerging markets, emerging market equity, and also bonds, actually. But then, particularly right now, there's tariff issues. You don't know what's going to happen. It's very uncertain. And even though when they have signed a deal, you don't know whether this deal is going to be sustainable or not. So at one point, you just decided to ignore it. Doesn't mean that it's not important, but you just decide to ignore for a number of months. And I would say some countries are better than others from that point of view. Obviously, the weaker, the smaller countries are in a more difficult situation relative to US, because US can say whatever, right? It's a case for a number of emerging market countries. And for bigger markets such as China, for example, of course, the game is different. China has a lot of arguments against. They cannot accept being bullied by the US from that point of view because they have leverage. They're the only producer and exporter of rare earths. US need those rare earths for the military use. So the negotiation game is a lot tougher, and we can see that it's been the ending tariff has been delayed for another 30 days, 90 days, right? So we can understand the leverage of China is quite big on that side.
So this is really astonishing that the China market went up so much right now. And do you think this power which China has is especially because of these rare materials which US needs so urgent?
On that negotiation with the US, keep in mind that China is one, if not the largest, but it's the second largest exporter to US after Mexico. They have leverage in many sectors. Of course, the rare earth is a particular strategic because it's used in the military, right? But in other sectors, China is a sole producer in many goods, right? They have leverage. They also buy. They can buy a lot. They're also a big importer, right? They could increase their imports from the US simply for the reason that the Chinese economy is very, very big. So of course, the size of China makes it special. Talking about the equity market and its performance, arguably China has done very well year to date. Over the last 12 months, it's a big outperformer. But keep in mind that China has been a very bad market the year before, right? For a number of years. When China has underperformed from 21, 22, 23, even part of 24. It's only from August 24 that China is starting to outperform quite reasonably, right? So if you look at it from a period which would be more than 3 years or 5 years, China is still struggling relative to other markets. Right?
But still, if you look the stock markets in general, it's quite astonishing that besides these uncertainties, the markets went up so well. How come?
those uncertainties are really focusing on the export side, on the external side of the economy of China. And keep in mind, China, when you look at many economies in the world, I mean, like India, China, they're very domestically focused, actually. Total exports relative to GDP is less than 5%, right? Not to say that the export is not important, but the domestic side of the economy is very, very big. And the stock market does not only represent the external side of the economy of China, it also represents the domestic side, right? And even within this domestic side of the economy, there are sectors which are doing very badly. For example, the property stocks in China have come down so much before, even though they are recovering a bit right now, they're still like 80% lower than they were 5 years ago, right? So, but from going from 10 to 20, you double basically. But you're still at 20 relative to 100 where you were a couple of years ago. So some domestic sectors are not doing so well. Even some consumer sector, it's struggling because consumption is not very, very strong in China. And you can see that the saving rates in China is very, very high. So Chinese people are not spending. They're a bit uncomfortable with the future outlook. Their properties have come down in terms of value. The job market is not very, very strong. So you have reason not to be too optimistic or to be crazily optimistic in China. But at a point of time, markets, you have to understand that the stock market is leading eventually to the economy, but it's not at the same time. The stock market is usually is a leading indicator, right? And at the worst time, actually, of the economy, usually you start to see markets going up. We have an English expression for that. We say the markets are climbing a wall of worry. And usually because the market expects something better, which we don't see yet in the real economy. But then, it may be possible that coming from a low base, because we've seen so many bad things already, that the economy is actually getting better. We don't see it yet in the numbers, but maybe next year we will be able to see it.
So this is the case also for China. Can you rely on the figures and datas? And is it just because the domestic people, they push the market because they invest instead of property into the market, to the stock market?
I mean, figures, you always have to be careful with figures, particularly in China, for sure. So usually the absolute level is not so important. You have to try to find trends, right? Whether we are in an improvement or whether we are in a deteriorating situation. And arguably, from an economic standpoint, it's not so easy to say right now, right? Because we still have deflation in China. Prices are still coming down. So prices are coming down for two reasons, right? Either because people are producing at a much lower price. There's competition, so they sell at a lower price. This is a beauty of competition. But sometimes because demand is not there, so people have to sell to clear their inventory, so they discount and prices are coming down because of that. Right now, it's not so obvious why we have what is the main component of this deflation, right? I mean, the negative impact of lower demand has been there for a number of years now. Maybe this impact is less and less now. On the other hand, China has been improved its manufacturing processes. They've been replacing foreign suppliers by local suppliers, which always means cheaper, right? So they've been able to produce less, but still being profitable, right? So this deflation has come from a good reason and from a bad reason. But at the end of the day, it would be nice to see the Chinese economy getting out of this deflation. It's not there yet. If I look only at the figures, not official figures, but there's another way to look at this inflation environment is the direction of long bond rates. Long bond rates, usually when you have a deflation environment, they're getting down. They're at a very low level. Prices are down, so price of money should be very, very low, right? So interest rates are coming down. In China, we're starting to see a reverse of that. It's very early, so Whether it's the beginning of a new trend, it's still a bit early to say. But we can see on both 10-year bond rate and 30 bond rate, the 30-year bond rate is getting higher for over 6 months now. The 10-year bond rate was at its low just 2 months ago. And now it's recovering a bit from a low of 1.6% to now around 1.78%.
So it should get better from this point of view.
Well, from this point of view, it's a leading indicator, which is positive.
Okay.
But again, I want to emphasize that sometimes we have a false start, right? So I would say we need a bit more data points to be more comfortable there.
Okay. To focus the whole emerging market again, the emerging markets got in the last few months very popular for the investors also. Is it that everybody takes the money and run from the US to the emerging markets or to Europe? Or is this a trust problem already? Or what do you see?
So the flows are very tricky, I would say. There's one big indicator is the dollar decline. Dollar has been very strong up to December last year, right? Compared to euro, compared to many other currencies, right? Now, usually the dollar has been pretty strong. Now, from the beginning of this year, the dollar has started to be really weaker on the expectation of maybe US economy being less strong, on interest rate potential cuts in the US, many ideas. Then what does it mean? You have global investors, who are putting money anywhere, right? Those guys have been putting money a lot in the US because the US market has been very, very good, right? So it's been a very good decision 4 or 5 years ago to buy tech stocks in the US, to buy the dollar, and to buy the bonds, to buy everything in the US. Now there's a bit of a reverse of that. So international investors or offshore investors, maybe they say, and I take the example of Korean investors, for example, which at the beginning of the year had close to $200 billion invested in the US market. Obviously, those guys, they have been losing on the dollar because the dollar went down against the won by 12% year to date, right? So they're losing on the currency. Maybe they bought a lot of Nvidia, so Nvidia has gone up, so it's okay. But on that bond investment, the bond market in the US has been pretty bad. And so you lose on the bond market, you lose on the currency. Maybe they say, okay, maybe it's over. So I need to get back my money. So those offshore investors have been selling a bit. And what they do when there's liquidity getting out of the US into respective countries, same in Europe, same in Korea, same in other countries, what they do, it's increasing the local liquidity. And this liquidity has to be invested. And sometimes it goes in the stock market, right? That's why some stocks in Korea have been very good. Some stocks in Europe have been also very good, right? Despite the fact that the environment or the economic outlook in Europe in particular has not been very, very strong, right? So we have a higher liquidity. And this movement is probably not over, right? Now, it's been strong in some areas, but not so strong in others, right? I cannot say that local money in Hong Kong, which has been plenty, has been invested back to the market in Hong Kong, actually, in China. So we still have a lot of cash sitting there, right?
Okay, so you don't
can be invested in domestic markets.
So it's not invested already?
No, probably.
So this could give another push to the Asian markets?
I definitely think so. And keep in mind also, those big movements, and not only on the equity side, there's also on the bond side, which is usually even bigger market, and also the currency. Right? Currency has been, the yuan has been particularly weak when you think about it. It's up 2% against the dollar year to date. No? So you can say, the yuan has gone up against the dollar. Yes, but it has come down against the Mexican peso. It has come down against the Brazilian real. It has come down a lot against the euro, against the yen. So on average, the yuan has come down. So it's becoming quite undervalued now. One way or another, when things are too undervalued, they have to be go back to equilibrium. And the situation, particularly between Europe and China, is becoming a source of concern. Many Chinese companies are big competitors to European companies, industrial companies like Siemens face a lot of competition in China. In the car industry, if China has on top of it the advantage of the currency, then those sectors in Europe are in trouble. So we must, at one point, we must have one way or another back. We have to go back to an equilibrium, and this equilibrium probably would go through a revaluation of the yuan against the euro.
Mm-hmm. And do you see already
Not yet. We don't see anything there yet.
Because you just said we had the overvaluation right now from the euro and the trend that the dollar goes down further. So how do you handle this?
Yeah, I think this trend. If anything, the short term, the dollar might go down further down, and most likely against its major currency, which is the yen and the euro. So, and the yuan dollar, we need some kind of intervention by Beijing to change the system there to allow a bigger revaluation of the yuan.
Mm-hmm.
But in the short term, I don't expect this to change a lot. I don't think the yuan can be revalued 10% in the short term. But I think this movement at this time is pushing more and more pressure. For at one point, it will be unsustainable. And when it is unsustainable, something has to give, right?
Mm-hmm. To get now to your investment themes, and there you see the economic resilience despite trade war in China, for example. Why is it like this?
What has been amazing actually with Chinese exports, you would have said, back when Trump was elected, that we can have a big problem with China. Trump's going to put some tariff at whatever percent, so Chinese exports to US will collapse.
Mm-hmm.
And equal Chinese export will collapse. But actually, Chinese export over the last 5 years has been diversified, much more diversified. I mean, the weight of the US in the Chinese total export has come down, which means that not that the total of Chinese export to the US has come down, but the weight of it. So the percentage has come down because China not only has export to the US, but also export a lot more to other countries, such as Europe or emerging markets. They have never been able, China, to sell electric cars to Latin America before. Now they're selling a lot of electric cars to Latin America. They've never been able to sell electric cars in Thailand. Now they're selling Thailand electric cars.
So they already have diversified their market.
They have diversified.
Mm-hmm.
Having said that, the US market is still very big for them, of course.
Mm-hmm.
To say the US market, they don't care. But it's less big than it was before. So quite frankly, in a way, over the last 5-6 years, whatever they lost in terms of market share of the US import, they make it up with other markets. The emerging market, and even before there was Russia. Russia used to buy from Europe. Now they don't buy anything from Europe. They buy no BMW from Europe anymore. They're buying a lot of Chinese cars.
Okay.
Okay, maybe they pay in oil, whatever, but the trade between China and Russia has gone to the roof. So in a way, that's what you have to understand. China is a very practical and pragmatic look at it. When the war happened between Russia and Ukraine, they foresee very easily that the relationship between Russia and Western Europe will go badly, of course. So we cut the imports of gas. We don't export that anymore. We cut nearly all the trading relationships. Russia, what can they do? They have to go to another provider, right? And China was very happy to fill the form.
Mm-hmm.
It's not that China has anything to say with Putin, that China doesn't care about Putin or don't care about the Russian policy towards Ukraine. They care about China.
Mm-hmm.
The Chinese people care about China.
And you even have China a little bit overweighted. That's, you said, because you look on the companies more. But is this possible if Europe and the US is so resistant to the products from China especially?
Yeah, there's still a big uncertainty. I think we're talking about the big trade uncertainty from US towards China. I think the biggest issue is not there. The biggest issue is European tariff towards Chinese export. And we're not talking about it because maybe it's not an issue because people have been negotiating in a more professional way. But there's sectors which are really in direct competition. The auto sector is a big issue. BYD can sell so many cars in Europe at the expense of Renault, at the expense of BMW, at the expense of Volkswagen.
Your main picks are Tencent and Xiaomi. These are technology companies, and isn't it quite difficult for them also the geopolitical situation right now?
For Tencent, they comply. Tencent has been, that's a policy to comply with whatever Beijing says, right? And you may recall what happened in 2020, just after during COVID, and 2021. Beijing came out with a regulatory environment which was very negative to the big guys. Tencent, Alibaba mainly. I think from Beijing point of view, they were too big. And they were taking too much liberties. I think the last 4 years, companies have learned that you don't want to go against Beijing. Whether you like it or not, Beijing is a given. Tencent has understood that. I think they've corrected that. Now, the growth outlook for Tencent is very, very, very nice. It's one of the best technology company in the world. I mean, by far.
And not expensive right now?
It's less expensive than many similar companies in the West.
Okay.
I would say. And given what they can do in terms of more efficient advertising, thanks to AI, I think they can charge more. So the potential for growth in the advertisement bucket is actually very good, I think. Plus, this is one of the few companies in China that can invest heavily in technology, in data centers, in AI servers, like Alibaba, like ByteDance. And I think that will help them to make even more money in terms of cloud service as cloud service provider.
And the Asia market is big enough, so they are not in
the China market. The China market is big enough.
Okay.
I mean, keep in mind that China is by far one major country where the internet penetration is much higher. It's much higher than here.
Yeah.
Much higher than in France.
That's right,
than in Europe, right? So that like nearly a good third now, 35% of the total retail sales is done through internet.
So the same goes with Xiaomi, I guess.
Xiaomi, it's a bit of a different animal, I would say, but it's like Apple. Tencent is a bit like Meta, but Tencent is worth $600 billion. Like 30%, at least 30% of Meta, and Xiaomi is worth less than $200 billion. It's not. Okay. It's comparable to Apple. It's not as big, obviously, but that's the aim of Lei Jun, Mr. Lei Jun, who is founder and CEO of Xiaomi. His model is Steve Jobs.
And then Korea, you are overweighted quite heavily. Aren't you afraid of the geopolitical turbulences with China? As to say, TSMC, for example, the Chinese have much interest to get into the...
You have two issues here. You have Taiwan on one side, and you have Korea on the other side.
That's right. Yeah.
Korea is less of a political issue, although you still have the problem of North Korea, right? But it's less important now, but you have to keep it in mind because it can come back. And the technology company in Korea, they are leaders in memory, particularly Hynix and Samsung.
Samsung, you said you're quite...
Yeah, and they need to be US compliant in a way, right? Because obviously the US is one of the biggest markets for them. They're global companies, right? And they do invest also in the US. They have some investment in China as well. I think they know how to navigate to this political environment. So I'm not too worried from a political angle with Korea. Now with Taiwan, obviously the issue is a bit more tricky. Taiwan, as you know, is not part of China. Although the current diplomacy from the US or from France or from Austria, Australia, you don't have a Taiwanese embassy here. You have a consulate, right? Yeah. It's the same in Paris, the same in the US. So it means we said this lasts from 1974-5, and it's been agreed between particularly with Mao Zedong anyway, that we regard China as the only representative of the China, right? But we don't say that Taiwan is part of China. So it's a bit of a paradoxical view here. And this view, which is a status quo, has done very well over the last 25 years, 30 years, right? Taiwan has been able to evolve as a major technology hub. You have incredible companies in Taiwan, TSMC being the absolute world leader. I mean, those telephone, everything we use, they couldn't be there if TSMC was not there, right? And they have other companies such as MediaTek, which is a big competitor to Qualcomm. There's Honhai, the Foxconn Group, which is the major assembler of iPhones. They're incredible companies. So Taiwan has been able to thrive in an incredible way, right? Taiwan is awfully rich. And China has allowed Taiwan to do so. China has been happy the last 40 years for the status quo as well. As long as Taiwan doesn't claim its independence in a bigger way. Of course, this changed a bit when Xi Jinping, the president of China, said that it would be nice that Taiwan go back to mainland, go back to the motherland before 2049, which is the 100-year anniversary of the Socialist Republic of China. And that's put the subject on the table. 2049 is just 24 years ago, right? So it's within our reach, And obviously with Nancy Pelosi going to Taipei back 4 years ago, it's put the spotlight on this issue, right? You can argue that many military experts have said that China is building up its military capability. Again, if you look at the total military budget in China relative to the total GDP, we're not at the level of the US, right? So China is catching up, basically. And it's not like spending all of it to military, right? But they've done some exercises around Taiwan. There's issues, no doubt there's issues. And for sure that China will never accept that Taiwan is not part of China. At one point, there may be some military intervention. If this happens, which is a very unlikely event from my point of view, it is a disaster. It is an absolute disaster. It's a disaster not only for China, for Taiwan, but also for the rest of the world, because it means I don't know what's going to happen to TSMC fabs in Taiwan if there's a military intervention, right?
But they already diversify their hubs also.
Yes, they do, but they've been saying that they're doing in the US, every other country, they would like TSMC to diversify, spend CapEx money in the US, in Japan, in Germany. They've announced that they do that. But it takes time, By 2030, given the amount of investment that has been announced to be done overseas out of Taiwan, we expect the total capacity out of Taiwan will be around 30% of total capacity.
Just
30%, not more than that.
Okay. So to summarize it, you were cautious, but you have to look at it. But right now, you are not.
Yeah, this is what I call a Six Sigma event.
Okay.
On a probability time. The Six Sigma is here, right? Here or here, which is where the probability is very, very low.
Okay.
It's not here, obviously, right? Here. But if it happens, this is a disaster, but the probability is very, very low. So what do you make of it?
Then you have India. That's interesting. There you are more or less a contrarian. You just told us that a lot of capital is going from India to China right now, but you are investing more in India right now. Why is it this? You said the banks are interesting, or
I think there's many sectors who are becoming interesting in India. I think the domestic story is becoming better compared to what it was the last 12 months. Arguably, India has been a big outperformer. This is. Well, India has done that, and China has done this basically up to a year ago, right? Now we see a bit of a reverse of that. The last 12 months in China recovering, India plateauing. India is not collapsing, and the market is not collapsing, not come down a lot, but it's doing nothing, and of course underperforming China. And you had a couple of international investors are switching money out of India to China. Right? Then, but that's just part of the story. Of course, each market have their international international investors, but they also have their domestic investors. And domestic investors in India are very big. And they're putting money in the market domestically. Those guys, they will not buy China. They'll just put money in India.
Yeah. Okay.
And China is the same. They have a lot of money there. Those guys, they will not buy India. They'll buy China. China or Hong Kong. Right? So what would make the difference between the two of them? Of course, there's two things. Whether the international investors will switch back from China to India. They might do this in the near future. I think it's a bit early for them to do so. Or maybe we have a lot more money going into international funds. So you have more money going into both markets. And then depending on the liquidity, that might push India a bit more than can push China. And then you have the local money. And local money, it's quite strong in both cases. Maybe in the next 6 months, might be a bit less strong, might be a bit stronger. It's difficult to predict. So, but for me, to try to predict this in the very short term, it's too difficult in a way, right?
So you need both markets, and they are very nationalistic investors in both countries.
Exactly. Well, it's not nationalistic, but they have no choice. For them, they have no choice. I mean, domestic investors in
just
India,
allowed to invest there.
It's like in Europe, and many investors in Austria or in Germany or in France, they only invest in their domestic market. They don't look at international markets, whether it's China or the US or whatever. Right? So it's a bit of the same over there. I think most likely in the next 6 to 12 months, I'm not expecting India to do a lot better than China. I expect both markets to do well. To do well. Maybe one will do a bit better than the other. China probably more likely to do better in the short term, but India may be better in the let's say longer term. Difficult to say actually, right? So that's why in our asset allocation now we don't have big bets against one to the other, right? They're both overweight in our fund.
But at your strategy, size matters at least. So these are the most important market. You are also invested in Latin America and overweighted, but in general, it doesn't make so much weight in your investments.
Yeah, obviously the Latin American market are smaller. When you look at emerging markets, Asia, from Taiwan to India, it's around 80%. The rest is the other markets, and the other markets is the big one is Latin America. It's around 7% of the index, and after you have Middle East, is around 6%, and you have Eastern Europe and South Africa. So, but we're talking about 20% of the global emerging market, and the 80% is in Asia, right?
Asia.
So, and obviously here, international investors are relatively, the impact is bigger, right? Because they're small markets.
And I have the feeling that everybody is just investing in Mercado Libre. This must be very expensive right now.
It is not so expensive because it is cheaper now than it was in the past. Why? Because the company has come out with amazing results. I mean, this is a company we bought 5 years ago. We bought at a higher valuation at that time than now, and still the stock has more than tripled. Because
there's still space to go up.
Because the internet penetration or e-commerce penetration in Latin America is still quite low. And quite frankly, they are by far the biggest and the most successful player in Latin America, not only in Brazil, but also in Mexico and in Argentina also. The Mercado Libre's head office is in Buenos Aires. So they're really big in all markets in Latin America. And quite frankly, the penetration is still very low, particularly in Mexico. In Mexico, penetration is low, and they've been better than the US Amazon, for example. Now, one competitor of them is Shopee. Shopee is part of a company called Sea, which is listed in the US. This is a Singaporean company. Sea has two big business. There's a couple of Asian business and Brazilian business. Shopee is very big in Indonesia and also in Brazil. And actually, they're doing very well as well.
So this is also an alternative
as well. Although it's not pure. I mean, Mercado Libre is 100% in Latin America. Sea, it's like 75% Asia, particular Indonesia, and 25% Brazil.
You also said positive Greece, and you don't have Spain.
Well, Spain I'd like to, but as you As you know, I mean, Greece is the only country in southern Europe which is part of the emerging market.
Okay.
Greece used to be part of European markets. It's been downgraded after 2014 to emerging market. It's probably likely in the next 2-3 years that it will be upgraded to European markets, to the developed markets. And so in that case, it will not be part of my universe anymore.
Okay, understand.
Portugal used to be an emerging market a long time ago, but it's been upgraded to the EM, same for Spain. So those other markets in Mediterranean markets, there's only Greece and Turkey, which are part of my universe.
And why are you so cautious regarding Eastern European? Because in Austria, everybody is bullish.
From Eastern Europe, there's mainly two markets, or mainly one market actually is Poland, right? Czech is very, very small, and the liquidity is not so big, so for that reason, we will not invest. The Polish market is good and liquid enough. The banks have done very well, I must say, and I'm not 100% sure I understand why they've done so well. So we are, for better or worse, we think there's better alternative elsewhere right now. So it's not that we are awfully negative on Eastern Europe. We're not, but it's just we are more positive somewhere else. And it's not big, you know. Well, no, when I look, Eastern Europe is including Greece, it's around 2% of the index, 2.3% of the total index. So,
okay. One company I just want to mention from your 10 major holdings. Hynix. What's this?
SK Hynix is a Korean company. They are one of the top company in memory.
Okay.
Remember when I said the memory, we talk about DRAM, NAND flash, this still memory, or this dynamic memory, which are in your phone, which makes everything work, basically. On top of that, we have another memory called HBM. HBM stands for high bandwidth memory. This is what I call the high-end memory that is needed for servers, for AI servers. Usually the leader for memory has been Samsung, Hynix, and Micron. Micron is a US company, right? There's also a Taiwanese company, but the three I mentioned are the biggest. What is special about Hynix is that they used to be really number 3, number 2, number 3, and not particularly better than Samsung. But the last 2 years, because of technology choice, they have been much better in advanced memory. And so far, they are the only one who are able to produce HBM for NVIDIA, for example. Micron does a bit as well, but very small. And so in the advanced memory, they are now becoming the leader, ahead of Samsung, it's a revolution in Korea, because in Korea, Samsung used to be number one in everything. And now, Samsung being not number one there, it's been really, really bad for Samsung. And Samsung has underperformed a lot the last 18 months compared to Hynix.
Okay.
Obviously, in total memory, this is very cyclical. It's the price. It's a bit like the oil price, depend on the supply, depend on demand, supply-demand situation, right? Now, in the total memory business, some of the supply has been transferred from the normal memory, which is called the DDR4, DDR5, into HBM, because by doing so, it's like you upgrade your facility, your manufacturing facility, and you get to a much better products, and that is selling at a much higher price, right? And SK Hynix has done that. So which means that the available capacity for normal memory has come down. So price there has come up. So this is good for Hynix. This is also good for
profits. Yeah. So you should take in account Hynix.
Okay. SK Hynix is very interesting, and also very cheap. It's trading at less than 6 times PE.
Really?
Earnings have been revised up tremendously. It's a net cash company now. The top management has been very, very active in terms of and quite aggressive into technology. They've done the good choices, and we've been very impressed by the company. We've been investors in Hynix for many years, sometimes big, sometimes very small, sometimes even nothing, because it has been a cyclical business. But the last 2 years, you can argue that it is much less cyclical because of HBM. HBM is selling at a much higher price and still in a very high demand. I think the cyclicality has come down. And at this point of time, the valuation of Hynix is still reflecting a very cyclical business. Investors believe in the story that the business of Hynix is actually becoming less cyclical, they should command a higher valuation, which is not the case yet.
Okay. To summarize to get to a conclusion of our conversation, did I get you right? We have to put more emerging markets, especially Asia, in the portfolios?
I think we definitely need to do so, particularly from a European point of view, because actually the decline of the US dollar has been a big beneficiary to the UN, to the euro, and to the European investments. I think the euro is probably too overvalued now, and at one point it has to come down in the next 18 months. Maybe not against dollar, but maybe against other currencies, particular EM currencies. And for that, I would take the advantage of having a high euro now and buy cheap EM currency, cheap EM assets relative to the euro. I think it's a good time to diversify from out of Europe to emerging markets now.
That's a good explanation. Thank you very much, Herr Varnier.
Thank you very much.
Alles Gesagte ist nur die persönliche Meinung von Julia Kistner und daher keine Anlageempfehlung und keine Rechts- und Steuerberatung. Für Verluste, die aufgrund von getroffenen Aussagen entstehen, übernimmt die Autorin Julia Kistner keine Haftung.